Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hanks. But let's bring in our next guest for our cash tag segment. It's going to be Landon Swan, the co-founder of LikeFolio. Welcome back to the show, Landon.
Thanks, Tom. Good to be here.
All right, so we're talking airlines. If you listen to this Delta CEO, everything is perfect, right? Demand's there. They expect demand to continue. Capacity is going to start increasing. Overseas flights are really big for the big three, Delta, United, American. Now, what kind of data are you guys seeing? Because it seems like my airline, or the airline that I frequent, is always towards the bottom as far as happiness goes, and that's American. But what are you seeing out of this segment? Because it seems like, people are pulling back buying things, but they're not pulling back on any travel and experiences at this point.
Yeah, I'll tell you, if you want to start with happiness, we can start there. And yes, I can confirm your airline of choice is the lowest of the big four. It's coming in at about 42%, really low. United, Southwest, and Dallas are all about the same at 54, 55%. So they're kind of have a commanding lead over American right now. And it's kind of, things are beginning to go back to what has always been normal with Delta and Southwest at the very top. That for a little while United bounced up in the top, and now Southwest is making a comeback. So it's good to see that. I'm not sure what's going on with American, but when we look at the just kind of look at the overall trends that are pushing this. I mean, and Delta kind of talked about it a little bit today. International travel is doing really well on a year-over-year basis, very strong, 64%. Traveling for work is up. Things are opening up, right? Now, there's still some concern with flight cancellations, but even flying for leisure is up year-over-year. And so that was the first thing that kind of came back when everything reopened, was flying for leisure, and then traveling for work was second, because businesses tend to be a little more conservative. And so now that's starting to pick up. And just in general, we're seeing a lot more data that's showing that travel is coming back. Even the TSA checkpoint data is plus 22% year over year. Still a little bit under 2019 levels, but we're working our way back. But when you look at, we'll take a look at the earnings scores for each one of these companies, so we can actually show each of these, and you'll see that Delta was the best. It was slightly negative, it was right near the neutral range. I mean, generally speaking, if you're within 20 points of zero, we're calling it neutral. So they're just under that at I think maybe 23 or something like that. But then you've got the other three that are pretty firmly negative, between somewhere in the 40s or 50s on the negative scale there. So we're leaning bearish going into all three of these. Delta, I would say we're a little more neutral, but you see what they did today. I mean, the stock, the reaction of the stock has been fairly whipsawing. It's I think around up 4% right now. I think they may have missed on some guidance or on some expectations, but overall the numbers were pretty strong, and definitely the commentary was very strong from the CEO. So I do like that. As a trade setup, I like that Delta went first, and they were the strongest of ours, kind of close to neutral, maybe leaning bearish, and they might be lifting up the other three, which could give a good opportunity for traders to take a more bearish stance on the other three as they report.
Okay, Landon, let's have some fun. I'm going to make an outlandish statement, and you're going to tell me why I'm insane, okay? Here we go. Airlines and new cars, the demand for those, no matter what the economy does, is going to remain robust because of pent-up demand. So these two sectors of the economy, autos and airlines or travel, are going to remain elevated in terms of demand because of 2 years of not being able to get them. Tell me why I'm insane.
Geez, new cars. I don't know if I'd go there. I mean, if new cars start coming out and they start getting, all the chip gets relieved, all the shortages there, I think what's going to happen there is you're going to see a big influx of used cars. The demand for used cars is going to drop significantly. The prices are going to come down. It's going to kind of balance things out a little bit, and you won't be forced to go buy a new car. So I'm interested to see how that plays out. I do agree that, if you want a new car, there's a lot of pent-up demand, but you might be able to satisfy that demand with a used car if prices come down because of new cars coming out. For travel, I think the biggest thing is this travel for work, and I don't think that you're going to see a significant decrease in demand if the dip in the economy is sort of where it is now. It doesn't completely crash. We've already seen the move to Zoom calls, but we also know that there's a lot of business travel that can't be replaced. There's conferences and things like that. And we all know that face-to-face is better than Zoom for the big meetings. For the everyday, yeah, I throw in some Zoom. So I do agree with you that I think there's going to be a lot of holding of demand on the travel side for especially work. But then when you get into flying for leisure, I will remind you that flying for leisure was the very first thing to come back. The people that were a little bit more, had a little bit more risk tolerance as far as COVID goes, were out there, and now we're seeing more people beginning to fly for leisure. And so there may be some pent-up demand there. I'm not sure. I will tell you, I wasn't invited to a wedding for like 2 years, and I got invited to 4 this year because all of a sudden everything's back up, and I've got to fly to these weddings. So I agree, there's a lot of pent-up demand that's gonna keep the travel industry growing. I'm not sure about the autos though.
Yeah, when you look at that, the pent-up demand for business travel, I've got a concern with that based on the fact that a lot of companies are going to start right when they're ready to ramp up travel for work. They're going to start pulling back on CapEx spending at this point because they got to shore up their balance sheets with interest rates going the way that they are, the economy potentially going into a recession. But at the same time, Landon, at what point is the breaking point as far as the demand for travel and what people are willing to pay? I think we've heard that where, Pepsi yesterday, that they increased prices and the consumer's able to absorb that. There's only so much that the consumer can absorb. And when I book a flight, like I just did, and I'm paying 3 times as much for that flight than I did 3 years ago, that's a concern moving forward if we don't get any reprieve on this. At what point is there a breaking point for these airlines where, hey, the demand's not going to be there because we're going to be probably in a worse macro environment?
Sure. I think the biggest thing that we've got to watch for is the price of oil. I think that's the key. And right now, you're going to get a little conspiracy theory here, but we are, we're walking up to an election, and we're releasing strategic oil reserves. If that stops, and that's pulling the price down, if after the election that stops and we start to build that reserve back up and oil starts to go up, these ticket prices are going to go very high. And so I do think that could be a concern because everybody has the pros and cons list in their head when it comes to flying versus driving, and a lot of places you can still drive to. And so if you're thinking about taking that vacation, maybe you change it and you start driving if the oil prices start to go up. I think that's really the big key to see if there's going to be a significant demand inhibitor when it comes to price on airlines. So I'm watching for that in the middle of November to see what happens.
Yeah, I'm going to, tell the airlines to increase capacity a little bit because they took all this money from the administration to survive during the pandemic, and they're not putting more capacity out there. That's another reason why flight prices are so high at this point. But Landon, if you guys had a score for United Airlines going into earnings, they've got it next week, what would that be?
So United is negative 54 right now. American's at negative 48, and Southwest at negative 43.
Boy.
So they're all right there, pretty firmly negative. And again, if they're going to be lifted up by Delta's report, that just that gives us a stronger position to go into a bearish bet.
Oh, and what were you guys on Delta going into that report yesterday? Because this seems like a surprise to the upside.
Right. It was negative 25. So, usually negative 20 is the breaking point between neutral and bearish. So I would say we were leaning slightly bearish. And when the report came out, based on the numbers, I would have said we got it right. But the reaction of the market is up a little bit. So and I think the comments from the CEO did a really good job of pulling that up as well. So again, if this is going to lift the other 3, then that just increases our position, or that gives our position a better starting point for a bearish bet.
Yeah, that Delta CEO tends to do that, gives that rosy outlook moving forward based on what they've got. All right, great stuff as always, Landon. Have a good day.
Thanks, guys. Take care.
All right, that's Landon Swan, co-founder of LikeFolio, breaking down the data on United Airlines.